Hello and welcome to the November edition of Monthly Viewpoints. There are rising signs that inflation in the US has peaked out and is starting to ease. Both CPI and PPI inflation have come in below expectations. This has resulted in a rally in the US and other global equity markets. However, the US Fed officials are proactively communicating that although they can start thinking of slowing down the pace of rate hikes, they will not be softening. So markets should quit paying attention to the pace and start paying attention to where the terminal rate could end at, which is likely to be around 5 to 5.25%. Hence, we are expected to be in an environment of higher rates for a longer time. Given this backdrop, Indian equity markets continue to be a standout in terms of the relative outperformance versus other markets. We believe that the higher domestic demand-led growth and relative macro stability has resulted in this outperformance. High-frequency indicators for October continue to show broad strength. Metrics like GST collections, registrations for the two-wheeler and passenger vehicles, bank credit growth are all encouraging. In addition, petrol and diesel consumption, power consumption, railway freight traffic, and port traffic remain at high levels, indicating that the economic activity is strong. The second quarter FY23 earnings season is over, and overall earnings growth was better than expected. We have not seen any significant downgrades to earnings at the index level. Going forward, we do not see any major downside risk to growth and earnings as commodity prices have seen a correction from the highs witnessed in March-April, and the rural recovery is also expected. We expect Indian equities to track underlying corporate earnings growth in the short to medium term, given that the current valuations are slightly higher than the long-term average. Among sectors, we find reasonable valuation amongst banks, PSUs, and pharma. At the same time, sectors such as discretionary consumption, real estate, specialty chemicals, industrials look attractive given their stronger growth outlook. Given the challenging macro backdrop, we expect some volatility to continue in the near term. However, we remain optimistic over medium to long term and expect Indian equity markets to give returns slightly below the earnings CAGR over the next 3 years. We provide a basket of funds for investors to choose from. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।